right. So what's the lowest credit score or worst credit score you've personally seen and still got a loan approved?
Great question. I get asked that all the time. There are different credit score requirements for different loan programs,
Right?
meaning like the minimum that we'll work with. Um, Outside of that, though, we also have broker options that not all lenders would have that gives us the availability to work with lower credit scores. But in addition to that, some lenders have what's called overlays, meaning that the program itself may have a certain credit score, but they require a higher credit score. So it's kind of cool to work with a mortgage company that just does mortgages versus just going through like a bank that does banking and mortgages, because we have more access to lower credit score options.
Okay, so that clears up, the difference between the bank and the mortgage
Yeah.
company because we have all these mortgage companies and then we have the banks, but the mortgage companies, it sounds like, has more flexibility in the loan types.
Yeah, I mean, we specialize in just doing mortgages. So we're going to have access to an array of products as opposed to just going to a bank that has, a list of certain things. And if you don't fit within that box, they don't give you a mortgage.
Wow. So what's the lowest score?
So the lowest score that we will work with right now would be a 550.
Okay.
But I do see where we have options coming available for lower than that.
Wow.
But it's going to require the buyer to have additional layers of things that improve the credit profile, meaning they have a lot of cash reserves or a lot of time on a job, things like that, that'll kind of improve or oversee the lower credit scores.
Yeah. So there's a lot of ins and outs, it seems. I mean, how do you fit all these things into a pre-approval?
That's also a great question. So, a lot of times with people, I always have an initial conversation just so they feel more comfortable in knowing that, I'm going to have options for them or at least give them a plan if I don't have an immediate option. So, I usually like to try to have, a 5-10 minute conversation with the client up front first, just so I can get a feel for their scenario, what things we may be challenging or, able to prepare for in advance. And then at that point, I usually will either do an application with them over the phone or I give them a link to fill it out. And then I just say, hey, listen, I'm going to put together some options for you. I'm not going to give you a one option answer. So we'll discuss once you've done an application, what sort of programs and options that you have available. And then at that point, we work on a pre-approval or a plan to get to a pre-approval.
Okay, that sounds good. So even if somebody is not immediately approved, you might give them some steps to get there.
Yeah, I mean, I don't think I've ever told somebody, I'm sorry, I can't do anything for you, see you later. It's always we're not ready now, here's a plan, here's steps we can do, check in with me from time to time, let me know how that's going. I don't think I've ever said to somebody, just, I can't get you a loan, see you later.
Yeah, wow. I mean, what do you think that most buyers or people might think that disqualifies them that doesn't? Like, because when you said 550, I'm like, that's kind of low. A lot of people think it needs to be 700.
Yeah.
I know that affects interest rates, but some people might be qualified and don't even realize it.
I think, honestly, people are more concerned with how much cash they need versus what their credit scores are. That seems to be the number one thing I get is, I thought I needed a lot more money to buy a house.
Okay.
There's certainly a million different options. There's assistance programs, there's bonds. Of course, there's USDA loans where there's no money down.
Yeah.
So really helping clients put together what they're comfortable with out of pocket or what they have and what programs we can align them with to help with that out of pocket.
Yeah. Wow. I mean, so we always ask for that pre-approval and we'll send potential buyers to a lender. I always do that. But how important do you think that pre-approval is?
So I can't stress enough that it's important to talk to a lender first and foremost. If you're going to be going into the home buying process, certainly, connect with a realtor. And a lot of times the realtors are going to send you to people that they trust. But the pre-approval part not only, helps the client to feel secure that if they find the house they love, they can put an offer in and somebody else is not going to grab it out from underneath of them.
They're ready.
Yeah.
Yeah.
But also that you guys, are confident in taking time and out to a client to go show properties, whether it's an hour drive for you each way or whatever it may be, knowing that your client can securely make an offer on a property if they find something they like. Because the worst thing is, you show them a property, they fall in love, they come to me and they're not ready.
Yeah.
And then they have to get their heart broken. So
That or the time it might take. Like if, sometimes pre-approvals I think can be quick, but sometimes if there's things you want to check,
yeah.
then that could take some time to make sure that everything's going to work out.
Yeah,
I mean,
absolutely.
I think the main thing at the end of the day is we want to get to the closing table. So we can have all these, there's some lenders out there that'll just hand out pre-approvals.
Yeah.
But if they can't get to the closing table, then it's useless. So you're making sure that if this person says yes, they can get to the closing table.
And that's where I think I take a lot of pride in that I do a lot of the upfront work upfront.
Yeah.
Just so that, as a realtor, if you send me a client, you feel secure in knowing that I'm going to get us to the table, first and foremost.
Yeah.
But also because nobody wants a surprise, 2 days before settlement where something comes up and you can't go to closing. So
we've done a lot of deals together.
Yes, we have over the years, for sure.
Yeah.
But I do take my time in doing those pre-approvals and making sure that, I've checked all the boxes and that we're solid. So that, also my name's going on it, and that's important to me. I don't want to have a reputation of, don't worry about her pre-approvals. They don't always close.
Yeah, and you're from Delaware, right?
Yes.
Yeah, so we're both locals. But how long have you been a lender?
So this year will be 10 years.
Oh, wow.
Yeah,
Okay. You're going to have a big party?
Yeah. My 10-year anniversary.
Yeah.
But yeah, I mean, previous to that, I worked in insurance and financial services. So I've got about 16 years total in the overall industry.
Okay.
So.
I've seen some buyers come to me with a letter they got in the mail, and it'll say, like, pre-qualified. They're pre-qualified. And we're like, great, let's go buy a house. But what is so I've learned that there's a difference between pre-qualification and an actual pre-approval. What is the difference?
So first of all, I don't ever do pre-qualifications.
Okay.
It's a lot of times just going off of what somebody tells you when you're putting in the information and spitting out a pre-qualification. So it's them saying, I make this money per year. Of course, there's no verification of that, no pay stub reviews.
Yeah.
Sometimes or a lot of times there's not even credit pulled. They're just telling you what their credit score is. And there's just too many variables that make it, wishy-washy. That's not going to be a solid.
And I think that we're not saying that buyers might lie on the application. It's just that they don't understand what might be important to answer certain things with.
Right.
And then all of that needs verification.
Right. Especially income. I mean, that's a big part of what we do in the pre-approval process because we need to know that you can afford the loan that you're asking for.
Yeah. Sometimes it's a lot of money, right?
Yeah. And somebody might say, and this may lead into other questions further down the line, but self-employed borrowers, I made $125,000 last year. Okay. And then once we review the tax returns, there's a different calculation that we do for qualifying for that. So.
Okay. Well, tell me more about that. Because I know there's a lot of self-employed people.
Mm-hmm.
They have a 1099, they have the profit and loss statement, and they try to get that, down to a low number so they don't have to pay a lot of taxes, and then it looks like they didn't make any money.
Right.
So how does that work?
So there's a couple different ways we can do it. In a traditional format, yes, we're looking at tax returns. How did you report your income? What sort of depreciation did you write off? What sort of expenses that we can add back in? We start with that net number, which is at the bottom, which is, I think, the number that I guess self-employed people don't understand that we go off of. They think we're just looking at their gross receipts for the year, but it's an overall evaluation. Now, with that being said, being that, the first conversation I said to you, we're a mortgage company, so we specialize in that. We do have programs where we don't necessarily go off your tax returns. We go off of your bank statement average deposits over a certain duration of time. Or, there's other creative outlets going off of profit and loss statement. And so it's good if you're self-employed even more before you file your taxes this year. If you're thinking about buying a house, have a conversation with a lender and see how that plays out.
And so everybody needs a pre-approval, like even vacation home buyers, second home.
If you're getting a loan of any kind.
Not just first-time home buyers.
Yes.
Yeah.
And even if you're thinking about pulling a line of credit or a bridge loan or something like that, it's still important to have that conversation with the lender so that you're comfortable with the numbers before you're walking into something.
Yeah, because your payment's going to change, things like that, depending on what you want to do.
Different variables,
Wow. All right, so we covered, we covered self-employed buyers, difference between pre-qualifications and pre-approvals.
Mm-hmm.
People might think, like when I talked earlier, that they are approved or not approved, but actually are. Like, how big of a deal are collections on the credit report?
So that's a good question. Medical collections are classified differently for us as lenders versus, say, a collection from an insurance company or an apartment complex or something previously.
Yeah.
And I will say that a lot of times when clients come to me, that'll be the first question I ask them. Like if they say they have a lower credit score, okay, what is it that's driving your credit score that you think on your credit report? I usually will ask them that before I pull credit. And a lot of times it will be collection accounts, but I'm working on paying those off. And that's where I say, whoa, before we do anything, let's look at your credit. I can run a score simulator to see different actions and how we get us to the score that we need to get to. Because the worst thing for the clients to be doing is throwing money at things that are either going to make their credit score worse or not improve it.
Wow, so they could be paying off something that they're thinking, oh, it's great, we're going to get rid of this, but it might not be the right thing for a home loan. Yeah,
because a lot of times with collection accounts, unless you're negotiating them to delete it from your credit report, paying it off is not going to...
I heard you say that the other day. It was like, you got to make sure if you pay that off that they are going to remove it from your report.
I mean, negotiate with
That's
them.
Part of the
they
deal.
Want your money, so negotiate. I will pay you, but you need to give me a letter that we're going to delete this from your credit. And as a lender, I can force that through and make that happen if you're able to get the letter from the creditor. So
I think it's important for buyers to know that we are all on the same team working together towards one goal.
We want to give you a house.
So, and then I know, but sometimes it gets frustrating for buyers when you're asking for all these things. And I know you look at bank records, bank statements, things like that, but do you source all of the money that you see on the bank statements?
Yeah, so that is probably one of the most important things is getting that evaluation done to make sure that the assets show the way that we need them to show for underwriting. Again, different programs have different guidelines. But understanding for us as lenders, we have to show where the money's coming from, and it can't be, I have a suitcase of cash at home that I'm going to put in the bank. There needs to be a conversation had up front, so that we can use the assets that you want to use, whether it be a gift or your own money.
It can't be dirty money.
No. The government wants you to pay taxes to be able to use it.
So, that comes up, a lot of asking for things. And sourcing that money, and especially for the earnest money deposit. So the deposit that is put down with a contract, you have to source those funds as well.
Yeah, so it's important to have a conversation, once you're under contract with the lender before you hand over that deposit check to the realtor, telling us where you're going to be getting that money from for the deposit. Especially if it's going to be a gift or something along those lines, there's different ways that we need to source that money. So, and we don't want to ask you for 1 million documents. Like, I would love to be able to ask people for 4 things and give them $300,000, but
done
unfortunately,
in a couple days.
So it's not, we're not your enemy. We're not doing it just for fun to to torture you. We're trying to get we want to give you a loan, and your realtor wants to get you into your house. So it really is a team effort.
I mean, I've had buyers say, that their credit score is perfect, but even with a perfect credit score, there could be problems.
Yeah, I mean, you could have no income stream, and that's the other thing too. I mean, I work with a lot of clients that are retired or on fixed incomes, and we have different income ways that we can create. If you've got investment accounts or retirement accounts, we can create income streams so that you can get a mortgage. And that's where, again, when somebody else tells you no, that doesn't necessarily mean that going to a specific mortgage company that just specializes in that is going to tell you the same thing.
Yeah, everybody has different programs, right? Different interest rates and different things that they deal with. Is there any, I know sometimes older people might think that they're too old to get a loan. Is that a thing?
So I'm really glad you brought this up. So my very first transaction I ever closed was an 83-year-old woman who was a first-time home buyer.
Wow.
Yes.
Did she come from New York City or something?
No, she's local to the area. Her husband had passed away. He had bought their house that they lived in. She was never on it before, and it was great. We were able to get her into some first-time home buyer programs. We can't discriminate against you because of age.
Right.
So, everybody's, as long as you're of sound mind and, you're over 18, we can give you a mortgage.
Wow. Those are the only qualifications.
No.
That would be nice. So that's cool. Because a lot of people do think that there's an age limit or something.
That would be discriminating, so we can't do that.
So going to the closing table and the lender, the loan has funded, where does that money come from?
So I've often said that I would love to just show up with a suitcase full of cash and hand it over to clients, because then maybe they would understand a little more about, why we're asking for so
Yeah.
many things. A lot of times we're giving you hundreds of thousands of dollars, so we have to vet every single checkbox to make sure that we can give you that loan. So we're a correspondent lender. So we, a lot of times, unless it's coming from a different channel, we a lot of times fund our own loans. And so after closing, a lot of times, or even once people have a mortgage for a long time, you'll get like servicing transfer notices
Yeah.
and that sort of thing.
They sold the deal, right?
Yeah. So with that, it's important to note that nothing changes on the terms of your mortgage. So we can't, you can't get your loan transferred to another servicing company and anything change about your loan.
Right, stays the same.
It's just changing who you're going to be making the payments to.
Yeah.
So back to your initial question. So we typically wire the funds from our pot, per se. And then after closing, we'll sell off your loan to free up funds for the next buyer.
Who fills the pot?
That's the magic question.
Where is all these funds coming from?
Well, I mean, that's part of the mortgage business, right? We're all in
Yeah.
business to make money. So it's, if it's working, that's
Different investors kind of
Yep.
put their money in.
Yep.
Yeah.
Yeah.
Or do they control who, like, the certain limits for, the lower credit scores and things like that?
the investors.
Yeah.
So if we go a broker channel, which typically means that we're brokering out a loan, so it doesn't fit the regular parameters. They will have their own credit score requirements. But other than that, for a typical mortgage, it's
Yeah.
program guidelines. So, a conventional loan will have a minimum requirement, an FHA loan will have a minimum requirement. And unless that lender, like I said, has that overlay where they want to higher than what that program requires,
Yeah.
we all use the same guidelines.
Wow, lots of ins and outs. I don't think people realize about the whole lending process. Like we could go. We had talked before this about doing another video on all the different loan types, because there are all these loan
We
types.
would be here for 3 hours. But
Yeah,
yes.
and I think that when people are looking for that pre-approval, that's another good point. What loan are they qualified for, and which one do they think is going to be best for them? Say they qualify for 3 different ones, but a lot of times I see, especially with first-time home buyers, and maybe they're going to do an FHA or USDA loan, they're like, oh, they might see like a fixer-upper, but that's not going to work.
Yeah.
So there's all these things that we need to clarify and make sure that they understand that those type of loans will require certain things for the appraisal to be met.
And that's something that, once a client is pre-approved and they're working with you guys through the process to find a house,
Yeah.
You and I have always done great at communicating, but that's what's important, is that
Yeah.
the lender and the realtor are saying, okay, I'm going to show this person this house.
Yeah.
What do you think? And so that's why it's good to work with people that, have that relationship, that have already worked together for a long time, because, they're going to be able to seamlessly get you through the process of finding a house and what program will work.
Yeah, and I've noticed too that you come to closings.
I try to go to every single one unless I'm out of town or something urgent.
Because
it's important
sometimes,
to me.
yeah, and sometimes you may not even meet the client, right,
No.
until closing, because everything's over the phone. But if there's an issue, like say the wire's delayed, or there's some kind of last minute thing, you're right there to fix it. We're not waiting for someone to call back. We're not waiting on anything. You're right there and handling any issues.
Yeah, and for me, I'm there for that reason. I mean, I often joke with clients, I don't need to be there, but I want to be there.
Yeah.
It's important for me to have that, not final send off, because hopefully I'll work together with them again in the future, but to just have that connection and have them walking away knowing that everything's, signed, sealed, delivered. I usually also, notate a couple of things at closing for the clients to know, like I'll dog ear their closing disclosure and say, hey, when you file taxes next year, make sure you pull this document out.
Yeah.
If you need to prove residency, use this document. And then I also explain to them about all the spam mail they're going to get. So those types of things, I think it's important for the lender to show up, show that you care, be there to support the realtor as well, and thanking
It gives
you
us
guys.
a lot of comfort. Like for me, I'm like, okay, we've all been very involved in this deal. Sometimes it can get very crazy.
Yeah.
And now we've made it to almost to the finish line, waiting on the signatures, but we're there together.
Yeah,
So
absolutely.
do you
It's
get a lot
team
of
effort.
repeat clients?
I do.
Yeah,
Actually,
I bet.
Being in this area and growing up in this area, that's what I love the most, is that, you have the local community.
Yeah.
I always say that I've gotten where I am because of that.
Yeah.
It's important to me to do a good job so that clients feel comfortable in referring their friends and family to me.
Yeah.
and in turn, that I can give back to the community and help people with homeownership.
Yeah, and I think having a local lender in your corner is very important.
Yeah,
One, you have a reputation in the area that you want to keep and maintain, so
absolutely.
it's important to you to do good customer service.
Mm-hmm.
I've had buyers that bring, pre-approvals and things from national companies. I won't name them, but, we all know who these people are. And, sometimes it does work out just fine. But what I have noticed and what has happened with buyers is when there's a little hiccup or a little problem, they're completely hands off. They won't go talk to their underwriters. They won't talk to their management. They are not really there to fix problems. So if things are perfect, they're great, but not when there's a problem. They can just decide, that's it, they're done.
Yeah,
See ya,
I always, yeah.
That's it.
I tell clients all the time I'm not a 9 to 5 Monday through Friday. If you need me on a weekend or an evening,
Yeah.
and if I can't answer my phone, I'll text you and tell you when I can answer my phone
Yeah.
or schedule a call. We want to close loans. I don't get paid unless I close loans, so I want you to get a loan.
Yeah.
And I care, and that's the biggest difference too. And I get a lot of clients that tell me that they're like, "Wow, you really care about this," and I do. I take it, I take it very seriously.
Yeah, I can. You've been in great communication. The deals we've done, you'll say, I'm doing this. I'll get back to you, in this day or whatever, and you do. You do what you say you're going to do.
Communication for me is probably the most important part about my job.
Yeah.
Not only communicating with the lenders and the realtors, but having communication with my team and having that open-ended and us really getting this, done as easily as possible. The worst thing you can do is not have that communication, because then it just creates frustration on all sides, and then emotions boil over.
Yeah.
And so I always, make it important to my clients to let me know, like, if you need something, please speak up. Or if you have a question, please ask me. Don't feel like you need to go Google search it. That's what I'm here for.
Yeah, everything's going to be specific for that person.
Yeah.
So Google's not going to have your answers.
I get that a lot too. People want to do, want to figure out things on their own online. And listen, for us, for lenders, that stuff changes all the time for us too. We're getting program updates constantly. So, we're wanting to help you understand each program and the ins and outs of everything. So just ask.
Yeah, and you're always available. You have you make your cell phone available, call, text, all that.
You have to be in today's world.
Yeah, because some people, it's tough too. Like, you're not a banker's hours, like you just said. People work during the day maybe, or maybe they work, they're only off on weekends, and you're going to be available.
Most of the time people are going to talk to me when they're not at work.
Right.
So being important, being available for those after hours, whatever that may be, is important.
Yeah.
So you don't have time to talk about a house and a mortgage when you're working.
Right.
Even though, you want to. Scheduling a call is great. And that way, and a lot of times if it needs to be a 9 o'clock at night call, as long as I have it in my calendar, I'm perfectly fine with it.
Yeah. People work different hours. You got nurses that you help and stuff. They may have different shift work.
Yeah.
All kinds of things.
Out of state people too. I get out of state people that are buying here in Delaware, because
different time zones.
Got a lot of people that want to come to Delaware. It's a great place to live.
Yeah.
So people out California, they're 3 hours difference, and making all those things work to get, so that they can communicate.
Yeah. Awesome. So what, like, if somebody's trying to work on their credit score, what will make it move fast?
Well, first, let me tell you the way to move it the worst is a late payment.
Yeah.
Because that is not fixable. So as much as, we work with clients when they have a lower credit score, or even they have a good credit score, but we want to get them an even better credit score so that they can get a better rate, communicating with the lender on how you can do that is important, because there's certain things we can fix and certain things we can't. We can have you pay something towards a credit card that may move your score 20 points. But in the midst of that, if you have a late payment on something or a new collection account hits, the late payment's not fixable. So that can tank your score 30, 40, 50 points.
How long does it take to recover from that?
It depends on the number of late payments overall, a lot of times on your credit, but sometimes it can be 6 to 12 months. Sometimes it can be 12 to 18 months. It just depends on what kind of a late payment it is, what kind of line the payment was late on.
Wow.
So that's important, is to keep your payments up to date.
What about bankruptcies? If I've seen that sometimes, how, can you still buy a house if you've had a past bankruptcy?
Yeah, that's where I say each program is different as far as the requirements for that. But we do have that broker channel in our back pocket that can do some wild things with, other than what's normal on a mortgage.
Wow. Okay. So pre-approvals are important. I always ask buyers for them.
Yep.
And, it's important to have that before going out and even looking at your first home, is have that conversation. Yeah.
And so what, do you get offended when people ask you for, like, do people get offended when you say, hey, I want to get a pre-approval before I show your property, or what does that process look like?
Sometimes, yeah. Sometimes it's a first filter, like, people that are really ready, they're gonna listen to what I say and do what I say. But sometimes people get really upset, hang up on me, yell at me. I had somebody that texted me for quite a few days about all of their financial, like how great they are. And I'm like, hey, great, talk to a lender.
Yeah.
But they just continue. They were so offended that they just kept for days, and I'm like, okay, but yeah, people really do get offended. But there's a couple of reasons I ask. One, I want to make sure that they're looking at the right homes, like you said earlier. They're not going to fall in love with a home and then, find out from you that they can't buy it. So that's terrible. Another, it's a kind of a safety issue. So I don't know if. Realtor safety is very important. I know that you try to show up and be at open houses and things like that. We've done a few of those. But if you've given the pre-approval, I know that you've verified a lot of information about this person. And I know that they're serious and that they went through the process. But
that's a great point. I never thought about it from that perspective, but that's even more of a reason for your safety.
Yeah. So I don't know if anybody's heard of Beverly Carter. I don't know if you've heard of her.
Yeah.
But she got killed, but her son goes around talking about realtor safety. And the people that killed her were not pre-approved. So they, she...
I didn't even know that.
Yeah, would that have saved her life? I don't know. Maybe she would have then found out that they weren't serious, but they were looking for ransom money to kidnap her, and she ended up dying. But yeah, that would have been a good filter of filtering out who's serious, because I've had a lot of people that may not have been serious. I've had, cash buyers that send, we make them send proof of funds, but I've had a lot of fake proof of funds. So people that fake, on paper, their proof of funds, just in an attempt to, I guess, try to buy a house with fake money. I don't know what their, goal is, but yeah, so there's a lot of fraud out there, and we might do another video on fraud, but there's a lot of reasons that people may not understand.
Yeah, and to me, like from my standpoint too, if you're willing to have a conversation with a lender, then you are serious about
You're
buying.
serious, yeah.
Because if you're just window shopping and you're not going to buy for 6 to 12 months, why are we looking at houses? Because they're not going to be on the market.
Yeah, and it wastes everybody's time. And one thing too, I do a lot of listings and help sellers and buyers. But some of the listings have families living in them, they're not vacant. And when they have a showing, they're getting maybe pets, kids, all of that together out of the house, tidying up the house.
Yeah, when you have kids, that's a lot.
Yeah, they don't want to do that for somebody that's not serious.
Yep.
So they want to show their home, they want to get it sold, but nobody wants to waste their time.
Right,
so, yeah.
Exactly. That you can't get back.
Yeah, yeah.
So, have you ever have a deal like fall apart that the clients, like, I guess, were in disarray from the lender's perspective, or like what sort of things, I guess, what was the worst deal you had that you saw fall apart, and what was the story? I
don't think that I've ever had a deal fall apart for lending reasons.
Okay.
I'm trying to think back, 'cause I've done, I think, about 125 now.
Awesome.
I think, or somewhere in there. Because I've always done local lenders. There may have been times where we used some of those national lenders because the buyer comes with it. Something happened, but then I said, okay, well, now it's time to go with a local lender.
I get called in on those all the time from realtors.
Cleaning up messes.
Yes.
Yeah. So I don't know that there's ever been one that has fallen apart because I like to use great lenders.
And that's the importance of working with people that you trust. I mean, trust and communication, you got to have a good team behind you.
Yeah.
That's what gives you, the security of knowing that your deal is going to go to closing.
Yeah.
So how often do you have clients that are shopping like way above where they've been pre-approved, or what you think is realistic for?
I don't think it happens too often because that pre-approval sets a nice goal.
Yeah.
you know, and that will get that out of the way,
Yeah.
you know, of people saying, oh, you know, they're only approved for 450, but they want to look at 550.
Yeah.
You know, having that pre-approval shows them what they are actually qualified for. They may watch one for 550 to, you know, or a little bit higher to see if the price starts dropping.
Yeah.
We might kind of look at that for a while and see. Or if it's been on the market a while, we might say, well, let's just give it a try.
Yeah.
Because sometimes that has happened too, where we're like, well, it was higher than they thought, but they took an offer, you know, that was more reasonable.
Yeah.
Yeah.
I mean, and you know, you're not going to put an offer for $100,000 under asking and get it accepted. It's just not going to happen.
Yeah, yeah. I've had it quite a bit lower sometimes. Just depends. There's all kinds of factors involved, but 100 is a stretch.
Yeah, absolutely. So, how important is it for you to work with a strong lender to help with winning the bid?
Oh, so been on both sides of that. So yeah, if I'm helping a seller and we have multiple offers or we have, you know, different offers coming in, I will share with them, this lender is local lender, we know them, you know, and I may call.
So you do explain that to the sellers when you're presenting offers a lot of times if there's a lender
Yeah,
attached?
yeah. Sometimes I'll call the lender, and I don't need you know, if it's not my buyer, I don't need their information, but I just want to make sure that that person's real and they, you know, it's a real letter. Like I said, I've had fraudulent letters. But I think it's going to be very important because the important thing for everybody is getting to that closing table. And we've had sometimes maybe a little off topic from pre-approvals, but we may have had offers that were really above ask, but we have to make sure it's going to appraise. So if it's too far-fetched and too high and they're coming in with a loan, it might not get that anyway because of the appraisal. So there's all kinds of different things to look at. But the main goal is making sure we get to the closing table, that we're not in escrow wasting everybody's time. And part of that circles back to having a great lender.
Yeah, and I'll often ask, you know, before we're going to put an offer in on something, obviously you and I have a conversation because, you know, you need a pre-approval letter to state a certain amount or what may be. And a lot of times I'll say, who is the listing agent? Because if they don't know who I am, I invite a lot of times a realtor to say, hey, tell that realtor they can call me. I want them to know that I've properly vetted the client and that I didn't just, you know, throw out a pre-approval without looking through everything. Yeah,
it definitely is helpful. I think it gives people an advantage having a well-known local lender that is known for getting deals closed.
Yeah.
It's very helpful. And it's helpful for me, too, going out with buyers. A lot of times with buyers, you know, we could be looking at multiple homes multiple times, weekends after weekend after weekend, and I know I'm putting all this time in and not necessarily getting paid yet. So knowing that on the back end that there's a strong lender behind this and that eventually there is a, you know, goal.
Yeah.
It doesn't make the realtor, you know, uneasy or, you know, start to get annoyed by all these showings.
Right.
You know, you're like, okay, it's going to work.
Yeah, I mean,
you know?
we would, in an ideal world, right, you'd show somebody 3 houses and they pick one. But sometimes where, you know, you guys are showing houses for 6 months, 12 months, you got to find the right one.
Yeah, and sometimes we work, I know I have some people that are out of state right now, and they're only looking when they're here in Delaware. So, you know, they'll be back in the next month or two. And, you know, so they're not going to buy right away. They're looking every time they're here. Yeah. Yeah.
So I guess, do you think that sellers understand the importance of the pre-approval part? Like, do they understand why you're sending them to the lender before you're willing to take them out to show houses? Like, is that something you normally have to explain in detail, or do they normally understand, like, it's because you need to get your financing secured? Like, how does that normally come across?
For sellers, it depends. I think that on some sellers they want to sell, you know, maybe it's a second home, it's vacant, they don't care, you know, just get it sold. Some that still live in the property, that it might be more money, they still have a lot of things there, they might want to see that pre-approval before they allow the showing.
Yeah.
That happened a lot during COVID. You know, everybody wanted to make sure that the people coming into the home was already pre-approved.
The possibility of sickness for no reason. Right?
Yeah, right. The risk there was worth it.
Right.
I think that kind of set a pace for because before that, it was really tough to get people to commit to do that.
Mm-hmm.
You know, they wanted to see the home,
Yeah.
and they did not understand why we just wouldn't open the door.
Yeah. And I think it's easier too, a lot of times, if the person that you're showing properties to is also selling their home, they know, like, when you go to schedule a showing, like, what all has to be done to get
Yeah.
out of the house so that somebody can come through and see it.
Yeah. So I try to make sure, you know, I do talk to the sellers about that.
Mm-hmm.
Really, all agents should be making sure that their buyers are pre-approved before going into somebody's home. This is somebody's home. You
Right.
know, it's an intrusion of their privacy.
It's personal, right?
Yeah. So, you know, it's a serious business, and I think there's sometimes we find that people don't take it very seriously, but it is.
Mm-hmm.
And we need to take it seriously. It's a lot of money, and it's people's, you know, personal asset.
So I guess with today being so online about everything, how often do you do virtual showings? Like, and is that process still the same with a pre-approval? Like, do you want, like, if you're going to go, let's just say the client's out in California and they're moving to Delaware, will you take your phone and make a video of the house to show it? Or, and does that process still look the same as far as getting them pre-approved, or what does that look like?
Yeah, so I definitely want them pre-approved before the first showing, whether it's
Virtual
in
or
person or
yeah.
virtual. But I did have someone in the Coast Guard that was moving to Delaware,
Mm-hmm.
and they needed to do a virtual showing, so we did FaceTime.
Mm-hmm.
They went under contract just based on the FaceTime and I guess some of my opinions, which
Mm-hmm.
is very tough, you know, because I didn't know, I hadn't met them before.
Yeah.
They did have some family members that were kind of local that were able to also come and see the house, I think, after
Yeah.
the contract.
Yeah.
But that made me feel better that the family members were, you know, they liked it too.
Yeah.
But yeah, I'll definitely do FaceTime, do videos,
Mm-hmm.
you know, because a lot of people can't get out.
Yeah.
Yeah.
Or they're like, you know, coming from a place that's not realistic.
Yeah,
to
they're
travel
not
to
here
come and see.
quickly.
They
Yeah.
know they want to live here, but they just can't get here to see. So.
Yeah, yeah. Yeah. So, all right. So we've talked a lot about pre-approvals and some of the loan processes. We can do some more videos too. I know there, like I said, to do like loan types. There's so much information that
Yeah.
goes.
I mean, send us your
behind this.
questions. What sort of things you want to know
Yeah,
about.
put your questions in the comments. We will leave our contact information. I'm Renee Edge, associate broker with Keller Williams Realty. I'll leave my contact information in the description.
And I'm Krista McBlain with Embrace Home Loans, so I'll leave my information as well. Feel free to reach out anytime.
Yeah, contact us. We'll get you in a home. What other type of is it? You know, vacation homes, first-time home buyers. What kind of buyers?
That I work with?
Yeah.
Every and all.
Yeah,
I mean, I don't really have one profile I work with the most.
Yeah.
Obviously, different markets may create more investment buyers at certain points, but I work with them all.
Okay, so even like investors.
Mm-hmm.
Yeah. All right, great. Well, thanks for watching, and we'll see you on the next one.
All right.